Welcome to the Deep Dive. Today, we're taking a deep dive into BlackRock's Q3 2024 earnings supplement. We're going to see what the world's largest asset manager can tell us about the markets, and maybe get some hints about some smart money moves, right?
That's right. Hopefully we can cut through some of the jargon and give you some takeaways to, maybe inform your own investment decisions.
Exactly. First things first, BlackRock is sitting on a mountain of assets, like an actual mountain. They hit a record $11.5 trillion under management this quarter.
Wow.
Yeah, to give you a sense of scale, that's larger than the entire global GDP.
Really?
Several times over.
Wow, that's
It's
incredible.
wild, right? But what I find really interesting is it's not just the sheer size, but where the growth is happening.
Yeah, and their profitability is certainly nothing to sneeze at either. They had a 45.8% operating margin this quarter, so they're clearly doing something right in terms of, generating profits, a big part of that success. ETFs or exchange-traded funds, they've seen huge inflows, like massive growth, with 8% growth in this sector alone.
Okay, so ETFs. For those of us who maybe haven't really gotten on board with the whole ETF thing yet, what is behind this, like this surge in popularity? Is it fad, or is there something more substantial driving this trend?
I think it's safe to say it's more than a fad at this point. ETFs really come down to diversification. They let you invest in a basket of assets like a market index or a specific sector, rather than just betting everything on individual stocks, which, as we know, can be pretty risky. So it's kind of like spreading your risk.
Makes sense. So instead of putting all your eggs in one basket, you're kind of spreading them out
Exactly, yeah. You
and
can.
potentially getting more stable returns that way.
Exactly, that's the idea.
Interesting, especially in today's, I'd say, somewhat unpredictable market.
For sure. It kind of takes the guesswork out of picking, individual winners and losers. You're basically saying, okay, I think this sector overall, or the market as a whole, is going to do well.
Yeah, like I'm betting on the house, not on individual hands or whatever.
Exactly. And, for investors who are maybe just starting out, or people who, frankly, don't have a ton of time to research individual companies,
Right.
ETFs are an easy and, importantly, relatively low-cost way to participate in the market.
Yeah, that low cost is key for a lot of people, especially these days.
Definitely.
It seems like BlackRock is clearly onto something here, and their, I guess you could say, significant investment in ETF seems to be paying off. But let's talk about another area where BlackRock is making moves: alternative investments. I feel like we hear that term a lot these days.
Yeah, this is where things get kind of interesting, I think. They're not just, sticking to the traditional stocks and bonds. BlackRock has poured a cool $246 billion, that's billion with a B, into alternative investments this quarter.
Okay, so let's break that down a little bit.
Yeah.
For those of us who aren't, Wall Street wizards, what exactly are we talking about when we say alternative investments?
Well, we could be talking about things like private equity, real estate, infrastructure projects,
Okay.
even things like private credit. Essentially, it's investing in things that fall outside of you know, the typical public stock and bond markets.
So it's like BlackRock is looking beyond the usual suspects. Like they're seeking opportunities in these kind of less conventional areas. But why? What's the strategic thinking behind that?
I think a big part of it, again, is diversification.
Okay.
Alternative investments don't always move in tandem with the stock market. So they can act as a hedge against volatility, which, let's face it, there's a lot of these days.
So if the stock market takes a nosedive, those other investments, the alternative ones, they could help soften the blow a bit.
Yeah, exactly. Think of it like a safety net for your portfolio, just in case.
I like the sound of that, especially with everyone talking about a market correction like it's just around the corner.
Right. It's always smart to be prepared.
Yeah.
But shifting gears for a sec, let's dive into BlackRock's fee structure. This is where, we see how they're actually making money, right?
Yeah, got to pay the bills somehow. A company this big doesn't just run on, hopes and dreams. So how does it work, their fee structure?
It's mainly a combo of base fees and performance fees. The base fees are kind of like a subscription,
Yeah.
a percentage of the assets they manage for you.
Yeah.
And then performance fees, those are earned on top when they exceed certain return targets for their clients.
So they get a cut for managing the money and then a bonus if they make their clients even more money on top of that.
Yeah, basically.
Makes sense.
And while their base fees bring in a nice steady income, get this, their performance fees, they saw a whopping 454% jump this quarter.
454, that's insane.
Mhm.
What's driving that kind of growth in performance fees?
Well, it suggests their active investment strategies are really paying off. You see, these strategies involve making, very calculated decisions about buying and selling assets based on market analysis, predictions, all that.
So it's not just about picking the right investments, it's about timing the market perfectly and making a move at just the right moment.
Exactly. It's a bit more hands-on.
High risk, high reward kind of thing.
Yeah, you could say that. Active management usually comes with higher fees, but the potential for, let's say, outsized returns can be really attractive to a certain type of investor.
Sure, makes sense.
But of course, past performance doesn't guarantee future results. That's investing 101.
Always, always got to consider those risks.
Absolutely. Never any guarantees when it comes to investing. Always got to do your homework.
Couldn't agree more. Now, let's zoom out a bit. Look at the big picture, the global landscape. Because BlackRock's report, it also gives us some good data on things like the S&P 500, foreign exchange rates, stuff like that. Right, because BlackRock's not operating in a vacuum. Their performance is obviously connected to what's going on in the global economy as a whole.
For sure.
So what are these indicators telling us?
Well, the S&P 500, which is kind of a broad measure of the U.S. stock market, is up 34% year over year.
Wow.
So overall, a strong market, which probably helped BlackRock's bottom line this quarter, right?
Yeah, a rising tide lifts all boats, or however that saying goes.
Right.
But a strong market doesn't last forever, does it?
Nope. That's the thing about market cycles. They're, cyclical. What goes up must come down, and vice versa.
True, true. That's where diversification comes in handy, I guess, right?
Exactly.
Having a mix of investments to help weather those market ups and downs. Speaking of which, you mentioned foreign exchange rates.
Yeah.
How do those play into BlackRock's strategy? And more importantly for me, how could those impact individual investors, people like me?
Good question. So foreign exchange, or Forex, it basically just means the value of one currency in relation to another. And those rates, when they fluctuate, they can really impact the returns, especially for international investments.
So like if I invest in a company overseas and then that country's currency like tanks against the dollar, my investment's worth less, even if that company's doing well.
Yeah, that's basically it. It adds like another layer of complexity, especially for investors who have, global exposure,
Yeah.
which is why BlackRock watches those fluctuations like a hawk.
Sounds like managing a global portfolio is like some next-level 3D chess.
I like that analogy. But yeah, and speaking of global reach, BlackRock breaks down its assets under management and base fees by region, which is really interesting. Gives us a peek into where they see the most growth potential.
Right, they have that chart. Looks like a heat map of money or something like that.
Exactly.
Looks like the Americas are still their biggest playground. I mean, a whopping 67% of their assets under management coming from this region alone.
Yeah, for sure.
But what about other regions? Anything promising popping up anywhere else?
Well, the Americas are still on top, definitely. But the EMEA region, that's Europe, the Middle East, and Africa, they've been showing some really interesting growth, especially in base fees. So BlackRock's definitely making strategic moves, expanding in those areas, anticipating some big opportunities for growth down the line.
Yeah, it's like they're already playing in the future, not just, reacting to what's happening right now.
That's smart. And speaking of smart moves, there was one more thing in the report I wanted to hit on. Their stock buyback program.
Oh, right, yeah. BlackRock's been buying back a lot of its own stock lately, like a significant chunk of change.
Yeah, and I was wondering if you could explain, for anyone who's not familiar with this kind of thing, what does it even mean when a company buys back its own stock, and why would they do that?
Sure. So basically, a stock buyback is when a company uses its profits to buy back its own shares
Okay.
from the open market.
Right. And by doing that, they reduce the number of outstanding shares, which can actually increase the value of the remaining shares.
Oh, interesting.
It's generally seen as a sign of confidence, like they believe in their own future, so they're putting their money where their mouth is, right?
Yeah, it's like they're saying, we think our stock is undervalued, so we're going to buy it up.
Exactly. And it can be a way to return value to shareholders.
Okay, so it's a way to boost their own stock price and also reward their current investors.
Pretty much, yeah.
Interesting. Makes you wonder, are they being a little overly optimistic?
Well, it's definitely a bold move,
Hmm.
but, BlackRock hasn't gotten where it is by making, reckless decisions.
Right.
They've got a pretty solid track record, careful analysis, strategic planning, all that. So I think it's worth paying attention to what they're doing.
Yeah, that's true. Very true. Okay, but I think we got to talk about the elephant in the room here, the overall economic climate. Things feel a little shaky, to say the least. Inflation's still hanging around. Interest rates are going up, up, up.
You're not wrong. It's a volatile time, that's for sure. There are definitely challenges ahead.
For sure.
But you got to hand it to BlackRock. In the midst of all this uncertainty, they're still delivering some seriously impressive results. Shows you how, resilient they are, how adaptable they are to changing conditions.
Yeah. They're like that friend who can just roll with the punches,
Yeah.
no matter what life throws at them. Okay, but what does all this mean for the average investor? Someone like me, for example.
Yeah.
Someone who, doesn't have billions of dollars just lying around. What are the key takeaways we should be taking from BlackRock's, performance and strategy here?
Right. Obviously, we can't all be BlackRock, but I think there are some really valuable lessons here we can all learn from. And I know we've said it a bunch already, but diversification is still absolutely key, especially in uncertain times like these.
Right. Don't put all your eggs in one basket. Spread the love around a little bit.
Exactly. And yeah, BlackRock might be all about ETFs right now, but gotta remember what works for them might not work for everyone.
That's true.
It all comes down to doing your research, understanding your own personal risk tolerance, and just generally making sure your portfolio aligns with your own financial goals.
So basically, don't just copy what BlackRock's doing. Try to understand why they're doing it
Yeah.
and see if that lines up with your own personal situation.
Exactly. Exactly. You got it. And I think beyond diversification, the other big takeaway here is you got to stay informed.
Right.
The financial world is changing every single day, and you got to be ready to adapt to those changes.
Yeah, what worked yesterday might not work tomorrow. You got to stay nimble. Well, I think that about wraps it up for today's deep dive into BlackRock's Q3 2024 earnings report. Hopefully you found it as fascinating as I did.
It's always a wild ride.
It really is. And remember, knowledge is power, especially in the world of finance.
Couldn't agree more.
Until next time, happy investing, everyone.